Time is the one thing you can never get back. Yet most young people are throwing it away without even realizing it. I'll start investing later. I have plenty of time to figure out my finances. I can worry about retirement when I'm older. Sound familiar? Robert Kiyosaki calls this the biggest mistake young people make. And it's costing them millions. The wealthy know something that others don't. It's not about how much money you make. It's about your mindset. In this video, I'll reveal what separates those who achieve financial freedom from those who struggle their entire lives. This could be the most important 15 minutes of your financial future. Time is the one thing you can never get back, yet so many young people treat it like it's endless. They put off financial planning, thinking they've got all the time in the world. But here's the kicker. Every day you delay is a day you lose the chance to grow your wealth. Imagine planting a tree. The earlier you plant it, the sooner it grows into something that provides shade and fruit. The same goes for your money mindset. Start early, and you'll reap the rewards later. Think about this. If you're in your 20s and you invest just $100 a month in an index fund like the S&P 500, by the time you're 60, you could have over $500,000. That's the power of compound interest, but it only works if you give it time. Yet, so many people waste their 20s chasing quick thrills or ignoring their financial psychology altogether. They don't realize that every dollar they spend on things they don't need is a dollar that could have been working for them. Here's the thing. Time isn't just money. It's opportunity. The earlier you start reprogramming your mind for wealth, the more you can take advantage of millionaire habits. It's not about working harder. It's about working smarter. And that starts with shifting from a scarcity mindset to an abundance mindset. But here's the catch. Understanding the value of time is just the first step. What you do with that time, well, that's where the real magic happens. Robert Kiyosaki's Cashflow Quadrant is like a map to financial freedom, but most people don't even know it exists. It breaks down how income is earned into 4 quadrants. Employee E, self-employed S, business owner B, and investor I. The majority of people stay stuck in the E and S quadrants, trading time for money. But here's the thing, true wealth and financial freedom come from transitioning to the B and I quadrants, where your money works for you instead of the other way around. Picture this. An employee works 40 hours a week, earning a steady paycheck, but they're capped by time. A business owner, on the other hand, builds systems like franchises or online businesses that generate income even while they sleep. And investors, they're the ones who put their money into assets like real estate, stocks, or even startups, letting their wealth grow passively. The difference between the rich and the poor mindset lies in understanding this shift. It's not about working harder. It's about working smarter and leveraging your resources. But here's the catch, moving to the B and I quadrants isn't easy. It requires a financial freedom mindset and a willingness to confront subconscious money blocks. Many people fear the risks or don't believe they're capable of building wealth. That's why reprogramming your mind for wealth is so crucial. Once you understand the quadrants, you'll see that the path to financial freedom isn't a mystery. It's a choice. And speaking of choices, let's talk about one of the biggest decisions you'll ever make. Chasing your purpose versus your passion. There's a lot of talk about following your passion. But here's the hard truth. Passion can be selfish. It's often about what makes you happy, not what serves others. Purpose, on the other hand, is bigger than you. It's about creating value for the world. Robert Kiyosaki emphasizes that success often comes from doing things you don't necessarily love, but that align with a greater purpose. Think about it. Would you rather chase fleeting excitement or build something meaningful that lasts? Take this example. Someone might be passionate about painting, but if they don't find a way to turn that into a purposeful business, like teaching art or selling their work, they'll struggle financially. Purpose is what bridges the gap between your interests and the needs of others. It's what drives millionaire habits, like discipline and consistency, even when the work isn't glamorous. The wealth mindset isn't about instant gratification. It's about long-term impact. Here's the kicker. Pursuing purpose often means stepping out of your comfort zone. It might mean taking a job you don't love to fund your bigger goals or learning skills you never thought you'd need. But that's where the magic happens. When you focus on purpose, you naturally shift from a scarcity mindset to an abundance mindset. And once you've got that foundation, you can start thinking about how to invest in what you love, which brings us to the next big idea. Do what you love sounds great in theory, but Robert Kiyosaki flips the script. Instead of doing what you love, invest in what you love. Why? Because passion alone doesn't pay the bills, but smart investments can. Think about it, if you love real estate, why not buy properties that generate rental income? If you're into technology, invest in companies like Apple or Tesla. The key is to align your interests with assets that grow your wealth. Here's a practical example. Someone who loves coffee could open a cafe, but that's risky if they don't understand the business side. Instead, they could invest in coffee-related stocks or commodities like coffee futures. This approach combines your interests with a financial freedom mindset. It's not about chasing shiny objects or trends. It's about making calculated moves that align with your goals. That's how you reprogram your mind for wealth, by seeing opportunities where others see hobbies. But here's the catch. Investing in what you love doesn't mean ignoring education. You need to understand the risks, the market, and the potential returns. It's about balancing your passion with financial psychology. Once you master this, you'll see that wealth isn't just about money. It's about creating a life you love. And speaking of avoiding shiny objects, let's dive into why chasing trends can be a dangerous game. It's easy to get distracted by the latest hot investment. Bitcoin, NFTs, meme stocks, these shiny objects promise quick riches, but they often come with massive risks. Robert Kiyosaki warns against chasing trends without proper education. Sure, some people strike gold, but most end up losing money because they don't understand what they're investing in. The rich versus poor mindset becomes clear here. The wealthy focus on long-term strategies, while the poor often gamble on hype. Think about it, how many people bought into Bitcoin at its peak only to panic sell when the price dropped? That's the danger of investing without a plan. Instead of chasing the next big thing, focus on assets you understand, like real estate, index funds, or businesses. These may not be as flashy, but they're proven to build wealth over time. It's all about shifting from a scarcity mindset to an abundance mindset, seeing the bigger picture instead of getting caught up in short-term noise. The truth is, avoiding shiny objects requires discipline and a solid financial psychology. It's about asking yourself, does this align with my goals? Do I understand the risks? If the answer is no, walk away. Remember, wealth isn't built overnight, it's a marathon, not a sprint. And speaking of marathons, let's talk about the importance of education and managing risks along the way. High-risk investments can be tempting, but they're not for the faint of heart or the unprepared. Robert Kiyosaki stresses that financial education is the foundation of managing risks effectively. Without it, you're essentially gambling. Think of it like driving a car. Would you speed down a highway without knowing how to brake? The same logic applies to investing. The more you know, the better equipped you are to navigate the twists and turns of wealth building. Take Kiyosaki's own experience as an example. He's shared stories of losing money on deals because he didn't do enough homework. But instead of giving up, he doubled down on learning. Reading books, attending seminars, and surrounding himself with mentors. That's the millionaire habit, turning failures into lessons. Whether it's real estate, stocks, or commodities, understanding the game is what separates those who thrive from those who barely survive. Here's the thing. Managing risks doesn't mean avoiding them altogether. It means taking calculated risks. For instance, instead of putting all your money into one stock, diversify your portfolio. Or, if you're investing in real estate, make sure you understand the market and have a safety net. This is where the financial freedom mindset comes into play. Once you master risk management, you'll see that every challenge is just another step toward reprogramming your mind for wealth. And speaking of challenges, let's explore the concept of liquidity and why it's a game changer in investing. Liquidity is one of the most overlooked concepts in investing, yet it's critical to building wealth. Simply put, liquidity is how easily you can convert an asset into cash without losing value. Stocks and ETFs, for example, are highly liquid. You can sell them with a few clicks. But real estate or private businesses, those are illiquid assets, meaning they take time, effort, and often a bit of luck to sell. Understanding this difference is key to developing a financial freedom mindset. Imagine this. You own a rental property worth $500,000, but you need cash fast. Selling that property could take months, and you might have to lower the price to attract buyers. On the other hand, if you had $500,000 in a diversified stock portfolio, you could liquidate it in minutes. This is why Kiyosaki emphasizes the importance of balancing liquid and illiquid assets. It's not about choosing one over the other. It's about knowing when and how to use each. Here's the kicker: liquidity isn't just about convenience. It's about strategy. Liquid assets give you flexibility, while illiquid ones often offer higher returns over time. The trick is to align your investments with your goals and risk tolerance. This requires a wealth mindset and a deep understanding of financial psychology. Once you master liquidity, you'll see how it fits into the bigger picture of building long-term wealth. And speaking of the long term, let's dive into why patience and vision are the ultimate keys to success. Building wealth isn't a sprint, it's a marathon. Robert Kiyosaki often reminds us that the key to financial success lies in thinking long-term. Too many people get caught up in short-term wins, chasing instant gratification instead of focusing on sustainable growth. But here's the truth. The most successful investors and entrepreneurs play the long game. They understand that patience, education, and persistence are the real millionaire habits. Take Warren Buffett, for example. He didn't become one of the richest people in the world by flipping stocks or chasing trends. Instead, he invested in solid companies like Coca-Cola and held on to them for decades. That's the power of a long-term vision. It's about acquiring assets that generate passive income over time, whether it's dividend-paying stocks, rental properties, or even intellectual property like books or courses. This is how you reprogram your mind for wealth, by focusing on the future, not just the now. But let's be real, thinking long-term isn't always easy. It requires discipline and the ability to delay gratification. It means resisting the urge to sell when the market dips or to spend your savings on things you don't need. This is where the financial freedom mindset comes into play. Once you embrace the idea that wealth is built over years, not months, you'll start to see every challenge as an opportunity. And speaking of opportunities, let's talk about how to avoid the biggest mistake young people make when it comes to money. Now that you've uncovered the secrets to building wealth, the question is, what will you do with this knowledge? Will you let it sit in the back of your mind? Or will you take action and start reprogramming your mind for wealth today? Remember, the difference between the rich and the poor mindset isn't just about money, it's about choices. Every decision you make, from how you spend your time to how you invest your resources, shapes your financial future. So, ask yourself, are you ready to embrace a financial freedom mindset? Are you willing to challenge your money beliefs, confront subconscious money blocks, and adopt millionaire habits? The journey won't always be easy, but the rewards are worth it. Start small, invest in your education, set clear goals, and take calculated risks. Wealth isn't built overnight, but every step you take brings you closer to the life you've always dreamed of. If this resonated with you, don't keep it to yourself. Share this content with your family and friends so they can benefit too. The more people who understand these principles, the more we can all grow together. And don't forget to subscribe to the channel and turn on notifications so you never miss out on more insights like these. Let's keep learning, growing, and building a wealth mindset together. Your future self will thank you for it. So, what's your next move?